Hi guys and welcome to the trading show. This week we are gonna talk about
markets, energy sector on the rise, our portfolio, gold surges,
Tip of the week, trend following on the crypto Polkadot,
and the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Stock indices are rising during this week. In this chart we see the Nasdaq that is trying to recover the historical highs, while the Euro Stoxx 50 has managed to break the recent highs, and the mini S&P 2 is close to the historical highs. On the bond front, however, we see some weakness, particularly on the US bonds. Very well the energy sector, we see good returns for oil and its derivatives. The crude oil future is close to the recent highs, as well as gasoline and heating oil. We see positive returns also for the metal sector and for the meat sector. Mixed returns for soft commodities, but sugar and coffee did very well this week. Mixed return for cereal too, almost completely negative currencies, while Bitcoin is slightly positive. It seems to have found a sort of support around the value of 35,000. As you can see, it seems to have stopped its bearish run in this area that seems to act at the moment as a support. On the volatility front, we have a situation quite similar to that of the previous week, with values that are up on short-term volatility, but which are within the norm for long-term volatility. As regards the implied volatility, we see a structure that is completely in contango. Therefore, the short-term volatility is lower than long-term volatility. The VIX index is close to the low, and this means that at the moment among traders there is no kind of fear about the future trend of the stock markets. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to show you two strategies on the gold future that has performed quite well during the last week. And in particular, the first one is a trend following strategy that goes overnight, so it stays in the market also at the end of the session. And I also want to remember that this contract has already rolled, we can say, has made the rollover to the next contract, which is, as we can see here, Q, so August, and the expired one was the contract of June. So guys, remember to do the rollover on this market, but Francesco Placci also will tell you. And we can see that the equity curve is pretty nice, and from the daily period analysis sheet we can see that the strategy had quite a good start this week with a profit of $4,000, then a loss 2 days consequently for let me say 2700s, and then a small profit in the current session. So in total we had a profit of around 1600 during the last 5 days. And also, as we said before, the equity curve is nice. Now we can move to the next strategy that I want to show you, and in particular this kind of strategy enters again on the gold futures market, but on the contrary to the previous strategy, this one enters is a mean reverting strategy, and so it looks for we can say collapses to enter long, while it will look for an uptrend to find short entries. We can see then that during the yesterday session the strategy entered here in correspondence of the low of the day before, and it waited for a fade breakout, which is a very famous pattern, in which we wait for a close under the low of the day before. This time the trigger, we can say, is the low of the day before, but it may be also different. And then we wait also for a close over that level, that trigger level, to enter long, and of course vice versa for the short side. As you can see, we entered on this strategy with 3 contracts, while on the previous one we entered with 2. Of course, this one is an intraday strategy, and so it is more scalable. We can see from the equity curve that also the mean reverting strategy, of course with some bad periods like in this one, has performed quite good, showing that this market may have also this kind of peculiarity.
Hi everyone, and welcome from Andrea Nebbiolo. Today we are talking about cryptocurrency, and in particular we will talk about the Polkadot, that is usually called also dot coin. Polkadot as project in general is a network that should allow the interconnection between different blockchains, and this should guarantee not only the transactions of digitalized tokens, but so not only crypto tokens, but also tokens of other kind of nature. And the most typical characteristics of this kind of product should be the scalability and the flexibility. So this product should allow the scalability that is not possible in general on the more traditional cryptocurrencies that had been created previously. And it's also important to mention that one of the co-founders of the Polkadot coin is Gavin Wood, that other than being a passionate of cryptocurrencies, many of you may remember him because he's also a founder of the Ethereum project. And it's also important to notice that the market cap of Polkadot is quite high. In fact, actually, from CoinMarketCap, we can see it is on the 9th place, and it has a market cap of 21 billions of dollar. That is a quite good market capitalization. So it has also an important market capitalization, and from this point of view, it's similar to USD coins, so USDC and some other coins. As usually, I've tried to develop a trading model on this product, and the trading model I'm trying to develop on this product is the trend following, based on the latest sessions breakout. And in particular, in this case, we will start with a very simple setup. In particular, we will buy from 1 a.m. up to 11 p.m. and we will buy and sell on the previous sessions highs and lows, so the extremes levels of the previous sessions, and so we will use just 1 day as reference value. And if we have a look to the report, we can see a quite nice equity curve. I remember you guys that this equity curve is built only on 1 year of data, on less than 1 year of data. This is just because even if I'm using Bitfinex as a data feed in this case, it wasn't possible to get more than this kind of amount of data. So it's also important to notice that, of course, visually, when you see an equity curve that contains very few data, the drawdowns and the run-ups are emphasized because they are not compressed between a lot of data. So you will not see a smooth equity in this case, also due to this kind of phenomenon. So just because we are seeing very few months of analysis, and it's not possible, of course, to see the backtest on a larger amount of data, just because of the lack of data on this product in general. But by the way, the equity curve is quite nice, as said, and in general the average trade is quite good. It's negative on the short side, but unfortunately here, because of the low amount of data, I wouldn't trust a backtest only long on this kind of product, at least at the moment. And I've also tried using the different kind of settings, so optimizing to find the best settings. And in fact, there are some interesting settings. For example, here we could put, for example, as a start time 1 a.m. and as end time 3 a.m. or 2 a.m. according to the other optimizations values, and as numbers of highs and low other values such as 5 instead of 1 or more days even. The problem in this case is that we would have gotten very few trades. In this case in particular, so with the best results, to get the best results, we should have chosen 1 a.m., 3 a.m. and 5 days. But as you can see here in the column total trades, we would have gotten only 10 trades. So of course a backtest that shows just 10 trades is not trustable, and in this case we would have had a very high risk of overfitting because of the lack of significant statistical evidence. So in general, just to summarize, I think this is an interesting crypto, and I would monitor this kind of product. I would keep monitoring this kind of product, but at the moment, in my opinion, is extremely difficult to make a safe and affordable trading strategy just because of the lack of data. So in this moment, it's probably better to concentrate our effort if we want, of course, to create some trading systems, to develop them on products with a higher amount of data.
No rollovers for the next week, but I remind you that today is the first notice day for metals, which we rolled yesterday. I hope you enjoyed this video, and if you want to learn more about the trading method we at Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships, and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the UNGER method now. You pay only shipping and handling.